Welcome, everybody. What a great crowd we have this morning. Thanks for joining us. I'm Kelly Weaver. I'm the Regional Director of the Small Business Development Center, and I'm based in Aberdeen, and we have a statewide network. So we have seven offices across the state. Anywhere that you live in South Dakota, there's an SBDC office there to help you. And how do we help you, you may ask? We provide confidential and free training for people that wanting to start a business, grow a business, learn more about the business of the business, which is why a lot of you are here today, to kind of learn more about that business side of your business. And we even work with people that are starting to looking into buying and selling businesses. So we provide a great service to help you navigate that process, which, for a lot of people, they only do that once in their lifetime. So we are located here in Aberdeen, in downtown Aberdeen, but as I said, if you are not in our northeast corner of the state, you'll find an SBDC office near you. You can look under the local assistance tab at sba.gov or go to our website, sdbusinesshelp.com. At the local assistance tab, you'll also find the South Dakota CEO Center, our East and West Women Business Centers in South Dakota, located in Spearfish and Sioux Falls. So check them out as well. I have added a couple things to the chat for us this morning. We have some links to training listings that Grow South Dakota and the SBDC offer, and also that SDCO is offering. And I am just also putting in a list of QuickBooks resources that we'll talk through briefly. So the goal of the course today is to give you a familiarity and kind of just walk through QuickBooks Online and give you a sense of what it can do and how it functions and how to get around in QuickBooks Online. I know for a lot of people that are used to desktop, QuickBooks Online has a whole different look. And so it's just like, oh, okay, I lost my bearings. I don't know where to start. So we'll give you some hints on that. So some of the information I have in the chat for you is a link to QuickBooks website where they offer their pricing. And I was looking at this morning, and lo and behold, they're having a great summer sale where you can get 90% off for 3 months of any of their platforms through August, I believe. So if you're looking in the market to buy a QuickBooks Online platform, that might be your best option. We do, through some of our SBDC national partners, have ongoing offers as well. That's the sbdcfinancialtools.org website. They're typically, they have a pretty good discount, 30% for a year versus QuickBooks normal 50% for 3 months. But now with the 90% discount, that might be a better offer. So I always suggest that people check both places because you never know what offers are being out there at any given time. Intuit does have an official YouTube channel, which has great tutorials, bite size on very specific topics. So that's another resource that you can lean on going forward. And I also provided a link to one of QuickBooks websites, Firm of the Future. It's a little more accountant focused, and it's kind of written for the accounting firms that are working with QuickBooks and working with clients with QuickBooks. But the thing I like about it is it does give you what's coming out new with QuickBooks. So it kind of gives you a heads up of some of the new features that are coming out. Or if you see something new in your feed and you're not sure about it, you can go there and find out a little bit more about it. So as I mentioned, we are going to be using the QuickBooks Online platform today. There are now 5 different levels of QuickBooks Online, and so each level has a little bit different functionality. Obviously, the higher up you go, the more services and the more features are there. So if you see us use a feature here today that you've not seen in your company, that may be the reason why that it's not available at your subscription level. One of the nice things about the online platform is you can start at those base levels and get your familiarity and kind of understand the basics of your accounting needs. And if you find that platform doesn't work for you anymore, all you have to do is just subscribe to the next level up. or add an app or something that to give you that additional functionality. It doesn't disrupt any of what you've done. It just unlocks some of those other features. So the one thing that is probably a downfall about QuickBooks Online is each subscription is for one company only. So if you have multiple companies that you're running, you might have two different businesses, you might have an entity for a business and an entity for another entity that holds the real estate for that business. They're two different entities, two different tax returns. That would require two different subscriptions for that. One of the other really great features about QuickBooks Online is you can add your accountant as a free user. Even if you have a one-user platform, you can add an accountant user. So that allows them to log into your QuickBooks and see maybe what you're seeing or help you through an issue or do some of the work that you're paying them to do for you, whether it's payroll or tax filings or anything like that. One of the other things that you'll find as you get into QuickBooks, one of the first things they'll prompt you to do is add your bank feed or connect your bank. And that's a great feature of QuickBooks, but I find with people that are new to QuickBooks and particularly new to accounting, sometimes that can be confusing. And we'll talk more about that. But I just say that because it is something that they kind of push and prompt right away. And if you feel like you're not ready for that or you're not comfortable with that, you can deny it. You can still use QuickBooks just fine, and you can still manually enter transactions. You don't have to have your bank account connected. But sometimes they really push you to do certain things and you're not sure, well, what if I don't? What's going to be is that going to be a problem? It's not going to be a problem. It'll just cause you to do a little bit more manual entry if that's the case. And you can always turn it on later once you find your way around. The other thing to know about QuickBooks Online, whichever platform you're using, it's kind of a core basic financial piece, although they continue to add a lot of things to it and almost to the point where, are they trying to do too much? I don't know. We'll see. But there are, if you find like the inventory is a good one, for instance. If you find that in QuickBooks native inventory features within the platform you're using aren't sufficient for your needs, you could look at the next level up to see if that's an option and if that has what you need, or you could look at other apps that you can purchase as add-ons to the QuickBooks Financial platform. And those will have more specific features. And there's hundreds and hundreds of different apps that you can add to QuickBooks. And there's some things that will be related to sales channels like Shopify or things of that nature, ways that you can integrate those things. So just know that the basic QuickBooks platform will do your basic accounting for you, but there's lots of ways to augment that, either by going up to a new level within the platform or looking at other outside third-party apps that you can connect to QuickBooks. I would always encourage you, if you're looking at other apps, to look at the apps that are available through the QuickBooks platform. They're third-party ones, but they're ones that have been vetted by QuickBooks a lot of times, as opposed to something you get in your inbox that says, we integrate with QuickBooks. I would go back into QuickBooks and see if that service is available through QuickBooks, because then you know that integration is probably going to work a little bit better. We're going to kind of walk around what is in this sample company. We're not going to go through the process of opening a new account or bringing in existing data, but those processes are pretty well step-by-step within the system. And so we're just going to look at what this sample company that already has data in it and how to move around in that. When you do start an existing company or do start a new QuickBooks platform, whether your existing company or a new company, starting that platform new, they typically ask you a series of questions those are really designed to help you customize QuickBooks so that it unlocks the features that you need and hides the features you don't. If you don't have employees, then you're not going to see a payroll icon up there because that's not something you need. If your system changes and you add employees, you can always change that setting and unlock those things. The ideal is that you customize this desktop to your needs and you get rid of a lot of the extra clutter that you're not going to use. And that should make it easier to move around and find where you need to find the things you need to use. So with that in mind, we're going to start with the basic structure of how things are laid out. And, this is what I'm going to say today because this is the platform that's in front of us today. But if any of you have been using QuickBooks, you know that the part of the online feature is you're always getting the newest and the latest updates. And so you could log on tomorrow and something could look quite different. They're also in the process of adding a lot of AI, what they call Intuit intelligence, to their software. So that also continues to change the looks of things a little bit. So kind of basic things. So in the home screen where we're at right here, you kind of have a side menu bar, and typically this home is giving you just a little bit about everything, a business at a glance, your bank accounts, this dashboard, if you will. You can customize and add widgets to it that you like. If you don't want to see certain things, if you don't care to see that, you can customize that. And the customization button is down here to do the things that you need to do. So this is kind of the starting point, and then this would customize your dashboard. This would customize your side menu. So feel free to play around with that as you find it.
Real quick, Kelly, I'm not sure if the screen is being shared.
Oh, well, that would be helpful, wouldn't it? And because you're right, I'm not sharing my screen. Let's see here. Okay. How about that? That should be better. You haven't missed anything. I was just talking about all those other things. So this is the dashboard here. And like I said, you can customize that dashboard by this icon up here. And, everybody who works with QuickBooks gets to a point of what's their home base. This dashboard you get to by this home screen. But if you find there's some other place that is kind of home for you or that you like to return to, you can always bookmark those pages so that they're easy to access. This is going to be where when you open QuickBooks, it's going to take you here. So feel free to bookmark any page that you want easy access to. As you'll see, this side menu bar is pretty short, so you might have 5 or 6 places that you go regularly. You can't fit them all on that sidebar easily. So the bookmarks is really helpful. The couple other features, you've got your home base. This side menu bar is another, you'll see these across the top. Those are what they call apps. So if we go to all apps, you'll see they're the same items. You'll see that those certain ones are pinned down here. So if we go to accounting, we see the breakdown of what's in accounting. If we go to the all apps here and we go to accounting, we see that same breakdown. So there's multiple ways. If I go to accounting here, I'll see that same breakdown here. So multiple ways to get there. Find the path that you like the most, or just, sometimes I think it's confusing because there's so many ways to get to the same place, but yet it's flexible. So don't think that this accounting button is different than this accounting button, which is different than the accountant button. They're all going to the same place, just in a different format. Also, when you have this menu bar open, you have this little icon up here, that will slide that back, and then you can slide it back open. When you want that extra real estate on your screen to be working, you can hide that menu, but then you can easily find it back again. Along the menu bar, or at the top of the menu bar, is this plus sign. So that's home base for, or an easy home base for creating transactions. When you're in, say, let's go back to home. If I go to sales and I want to create an invoice, I can do that under here. But I can also go up to create and create an invoice. So again, multiple ways to get around. You'll find that not under sales, you can't do everything. Not everything is listed under that menu, but they all are listing here. So if you're looking for something like I'll give an example, a journal entry, the only way you're going to find to do a journal entry is to go to this create menu here. This has all the different transactions you can do, where the app menus have the most common transactions. So when you're looking for something a little more uncommon, you might want to use that create menu for that. And then at the top over here by the gear icon, that's your settings menu. So like I said earlier, when you start QuickBooks and you have a question about, do you charge sales tax? Do you track inventory? Do you have input and payroll? Do you offer terms of credit to your customers? That all sets up different settings, and that functions or directs how QuickBooks looks and how it functions. So when you need to change those settings, this is where you would go to do that, to go to the gear icon. This is also where you go to manage your subscription levels and your billing for that, to make sure that your credit card, your payment method is up to date, so you don't, lose access to your software because they couldn't resubscribe you. So in the gear icon, I just want to walk through a couple different things to give you some examples of how this is used. So under your company, if we look at account and settings, this is kind of where you can set some of those preferences. Here's where you put your company information, your legal information, your contact information, your address, and that information isn't required, but if you're going to print an invoice and you want your address on there, then you need to put it in, and here's where you would put it in. It also allows you to customize sales forms in this process. So let's give an example of some of these things. So under this company menu or these settings menus, we have other things. Usage will tell you how many users, how many chart of accounts. Every platform has a limit. So for this platform, there's 250 accounts you can have. This company's currently using 44. So same with billable users. That'll give you a sense of how you're using the software. If we go to sales, for instance, this is where we can put information about, are we invoicing people's, what our invoice terms are, what things are we using, or what things are we not using. Custom transaction numbers is turned off. Shipping is turned off. Maybe we're a service company. We don't ship things, so we don't need that. And we don't need that field showing up on an invoice anywhere. Products and services, are we tracking those? Late fees, messages. You can put default messages on your sales forms. Any kind of reminders. There's all sorts of things that you can use or not use depending on how your company's set up. Another example under the Advanced tab, for those of you that are maybe a little more on the accounting side of the world, what's the accounting method? If you want to change different labels for how those are using, what's your fiscal year start? Do you want to use chart of account numbers for your chart of accounts? Are you tracking classes and locations? Now, they're more higher end features, are not available in every version of QuickBooks, but this is an example of the types of things that you can toggle on and off, and will change how QuickBooks presents itself to you. So what I always suggest is that you take a little time to walk through each of these and understand what it is that you can change or not change. There might be some little thing that really bothers you. Why can't I do that? Well, it might be because a setting is turned off. So if you take a little time to walk through that, that will give you an idea of what's available, what's not available there. Let's see, did I look a couple more things here? The manage users, if you have multiple users, you can set those up in here and you can dictate what access or what level of what role they're going to play. So if you have somebody that all you want them to do is create invoices and handle that side, you can, give them access to that, but not to the rest. And this is where you would add your accountant to the platform so that they can log in and look at that. And then the custom form styles is right here where you can go in and customize. Maybe you want to add a logo, a tagline, whatever. You have different, this is like the standard form that you can edit, but then you can also create new styles, new forms that you want to edit and customize. So that gives you just an example of all the different things that you can do in here. They do have a desktop app for those that are familiar with desktop. What the desktop app does is it kind of changes the look of your QuickBooks online account, so it's a little more looks a little bit more like a desktop, maybe a little bit easier to get around for you. So that's also available. All your different lists here, other tools for importing data, exporting data, and budgeting and some of that information. So the gear icon is really an important place to know, so you know how to make those adjustments and customizations, and then the create button for creating new things. We have a few other items I wanted just to point out. This will tell you if you have other integrated platforms with your software. A help button, obviously. This button here looks a little bit similar to this button over here. This is the Intuit Intelligence. This is the AI agents that they're adding to QuickBooks. And I don't know what it's going to show us exactly in the sample company. You'll also see times they'll have beta. That means it's kind of in the works. So they do kind of release some things into the wild a little bit. Obviously, they've vetted it a lot before it gets to you, but it's still not like the final version, if you will. And they're looking to see how people are using things so that they can better improve it. So you can use that if you want. I guess my only caution is accounting, and doing accounting is a specialized way of looking at your financials for your business. And if you don't know what you don't know, you're not going to know if what they're telling you to do is the right thing or not. And so if you're really wanting to use this, but you have no accounting knowledge at all, it's supposed to be intuitive. The language is supposed to help you understand that. But I do encourage you to work with your accountant or your tax preparer, somebody who has some QuickBooks and some accounting knowledge, to say, go in and put your company together, go in and do your books for a month, and then have somebody look at it that understands accounting, look at your financial statements and see if they make sense. I mean, that's one of the first things I do when I'm working with customers. If I see their financials, I can easily point out 2 or 3 or 5 different things that they could be entering wrong, just be how it shows up on the financial statement. And when you don't know how that financial statement's supposed to look, you don't know what you don't know. So it's easier to get some of that help and guidance up front so that you're not having to go back and fix a lot of things later. So that would be my advice for those of you that are new to accounting and new to QuickBooks. So that kind of gives you the platform. We're going to go back to our home screen here, and we're going to look a little bit about the chart of accounts, because that is truly the backbone of your accounting system. Every transaction affects at least two accounts, an equal debit and a credit. And so one of the things that QuickBooks does well and makes it intuitive is it makes it look simple to you, like writing a check or creating an invoice, but you don't always know the accounts that are being affected in the backside, and that's really where the chart of accounts comes into play. So they will give you a chart of accounts. If you're starting a new company and you don't have a chart of accounts that you're importing into here, they will create one for you based on your industry and your legal structure and that sort of thing. Those questions that you answer starting out, it'll give you a chart of accounts to start out with. You can edit it and customize it any way you want. So one thing to think about is, what do you want to track for sales and expenses? It will give you some examples and some to go by, but maybe you want something more specific, or maybe you want to rename an account. So we'll look at that. So the balance or the chart of accounts by nature is listed first by the balance sheet accounts, which you see it says BAL here. That means these are all balance sheet accounts. The balance sheet is your assets and your liabilities. Assets, what you own, liabilities, what you owe, and then the net worth is the difference between the two. So it starts with the assets, with the most liquid assets at the top, your checking and savings account, to your accounts receivable, to your inventory. Then you get to more illiquid assets like your vehicles, your equipment, and then you start moving into your liability accounts where you owe people, credit cards, taxes payable, things that you're paying every month, loans and notes. And then you have your equity accounts. The retained earnings account is not an account you ever do a transaction to. That's one of those behind the scenes that QuickBooks takes care of. The opening balance equity generally should be done only when you're starting your company to begin with, to record the difference between your assets and your liabilities. But also if you create an account and you put an opening balance in when you actually create the account, it'll use this account for that. You'll see that the balance sheet accounts have balances where the other income and expense accounts don't. And that's because those balance sheet accounts live throughout the life of the company, where income and expense accounts are traditionally considered closed out and zeroed out at the end of every fiscal year. So they don't carry the balance because eventually they're going to get closed out into retained earnings at the end of the year. Doesn't mean you haven't charged something to that or you don't have a balance in those accounts. If you run a report for that account, it just doesn't show it here. So the next after your balance sheet counts are your P&L, your income statement, or your profit and loss accounts. So all these with the purple icon, and those are identified as income first. Then you have your cost of goods sold, which is the cost of the product that you're selling. If you're selling candles and you have candle sales income, your cost of goods is what each candle cost you that you've sold. And then the expenses are all your different operating expenses. So again, they give these to you. Look through this chart of accounts that's been provided. Is there expenses here that you don't use? Is there sales accounts that you won't use? Then you can get rid of them. Or you can rename them to something else that you will use. So you don't want to make this list so long that it's not manageable, but you also want to be able to track the things that you want to track. You'll see in this list here that there are these accounts that are indented. We call those sub accounts. And what they are, what they do is they allow you to get into some pretty good detail. Like this is job materials for this company. The sample company is a construction company, like a landscaping company. So these would be the types of job materials that they would use for a customer's project. So they might want to see how much they're spending on those materials by these specific categories. But then it also gives them the ability to look at just job materials overall and hide this detail by making these sub accounts roll up into a total into this. And you'll see that job materials equipment rental, cost of labor, permits, they all roll up into the job expense account. So if they were looking very high level, they could say, okay, here were my sales and here was my cost of my jobs for those sales. But then if they wanted to drill down, they could. So there is ability to get more detail without having, you do have additional accounts, but you can collapse those accounts into the larger accounts. So when you're looking at a financial statement, it's not 5 pages long. So you really just want to think about what you want to track as you're working on this. So I'm going to just go to my reports here and show you what those look like. So I'm going to do a standard profit and loss statement, and I'm going to do it this year to date. So you can see here's our job materials with those 3 categories. There was 4 listed in the chart of accounts, so there must not be anything charged to that because they don't show zero balance accounts on this report. But you'll see that this will collapse into one number. And it will make I could do the same with labor. So it makes this statement shorter and a little bit easier and more concise. So you might want this detail for your purposes, but when you give the account, the profit and loss to the bank, you maybe they don't need that detail. You could just collapse it. And I think there's a way to collapse the whole thing. It might be under this without having to click on every single one. I'm not seeing it right at the top of my page here, but so just know that that's an opportunity to, and how that information presents. If we look at this number plus this number plus this number equals this total for job materials. So when you're looking at your financial statement, you don't want to think that these are all expenses and this is another expense. This is the subtotal of these expenses. So, and the indentation is the hint for that, and the bolded totals also are a hint for that's a subtotal for that category. So that gives you an idea of how sub accounts are used and how they present themselves in a report. Okay, let's go back to our chart of accounts here. So if you want to change the name of an account or get rid of account, how do you do that? Well, let's go back to the top here. So with every list that you'll see in QuickBooks, there's usually an action column over here. And I'm going to go back to my income and expense accounts because those are more likely the ones you're going to change. Like this billable expense income, let's say, that's not anything I'm going to ever use. If I click on the down arrow, I can make it inactive. You don't delete accounts per se in online like you did in desktop. It just makes them inactive. And then it doesn't count towards your number of active accounts. Typically, you want to get rid of it if you aren't using it or never will use it, or if you have used it in the past, but you're not going to be using it in the future, you can also make it inactive. And then what that does, if we look, okay, so it wouldn't let me deactivate it because it has activity. Or it's tied to maybe some workflow, it looks like. Maybe I'll choose a different account that's less likely to be. If it allows you to make it inactive, it disappears from this list. But if there's activity in there, it will still show that activity when you run a report that covers the area when there's activity. So by inactivating it, you're not going to lose data. You're just going to make your list more manageable if it's something you truly don't use. Some of the reasons these that we chose wouldn't let us do that, they're probably tied to they might be tied to something in the item list or the product list, or so you can't really make them inactive. They have to be available. But if you're starting from scratch, you should be able to customize this however you need to customize it. If you truly just want to change the name of it, so instead of disposal fees, maybe you want to call it garbage fees. Then you just go over to the same arrow and do edit. And then it edited the wrong. And you can just change the name. And then once I save it, it's still in the list. This list is organized alphabetically by account type. So all the expenses start from A to Z. All the incomes start from A to Z. So if you're trying to find something, that's another good way to find it. Also, there's always a search button up here where you can search for the product name or account name. When you are creating accounts, let me just do new up here. I can give it a name, give it an account type. That's whether it's an asset, liability, income, or expense. And then you choose which one of those it is. So if this is just a regular expense account, so I'm going to create one for merchant account fees. It's an expense account. You have to choose a detail type, which just allows you to subcategorize it, or it's like you can sort by type if you need to. I don't see many people using that. This is where you would make it a sub account if you wanted to do that, and then you would have to tell it what account you wanted to make it a sub account of. This description is purely for your use. So the main things you'll see, these three things that are highlighted or asterisk, excuse me, those are the things you have to put in here. The rest is basically optional for you. And then it shows it where it's going to land in your profit and loss statement. Again, it's in alphabetical order underneath the expense category. So that is the simple way to create a new account. If you need something in there that's not, pick what kind of account you're needing to create, give it a name, and account type, and then it's going to add it to your list. So if we go down, income, expenses, there it is, merchant account fees. As I said, you can add account numbers if you're used to using account numbers, or you have an existing chart of accounts that has account numbers. You just need to go back to this settings menu and turn on that feature. And then when you create an account, there'll be another field in that new account record to put the account number. There are certain accounts that QuickBooks sets up no matter what, and assigns account numbers to, even though they're hidden in this case. Things like inventory, accounts receivable, accounts payable, payroll expenses, those are some standard ones that QuickBooks uses because they know it's part of an overall workflow within the accounting system. Okay, let's talk a little bit about the bank feed. I mentioned that earlier. This bank transactions tab is really the bank feed, right? This is where the bank feed interacts with your system. These cards up here indicate which accounts are connected to my QuickBooks. And so I've gone in here to link the accounts, and I've given them the bank number, the routing number, the account number, the password to log into my online banking, and then that feeds that information back into QuickBooks. And so every time a new transaction processes through my bank, when I open up my QuickBooks, it's going to go out and pull that information. You can see this was just refreshed 0 minutes ago. It's going to refresh that information. So this will show me what my bank, if I were to log into my online banking, this would show me what my bank account balance would be. The fact that there are these numbers up here, these indicate transactions that are pending. And we're in this checking account, so here's the 25 pending, and here's the 25 accounts that are pending. The thing that I think gets confusing for people is they look at this and say, oh, this is here. This is reflected in all my reports. This is already entered into my QuickBooks, when in fact it is not. That hence the word pending. This is basically, they're in limbo until you tell QuickBooks what to do with them. Now, QuickBooks might have some idea of what to do with them, and it might give you some suggestions on this list, but until you actually post it, it does not reflect in any of your financial reports that you have. It's like it doesn't even exist. So sometimes that gets confusing for people. And the other part that gets a little bit confusing is if you've entered something manually into QuickBooks, it's still going to come in through the bank. So ideally, and I don't know if we have any in here, ideally it's smart enough to match and say, hey, this transaction fed through from your bank for a deposit for $868. There's also a transaction that you entered into QuickBooks manually for an $868 deposit. We don't want to double up that deposit. It's actually the same deposit, and QuickBooks is rightly saying that's a match. So we just want to match those two, not re-enter it as a separate deposit. So just keeping those things in mind can really save you a lot of trouble with this. You don't necessarily want to blindly do whatever QuickBooks tells you to do. And you'll see that even though there's a post there, there might be some information in these transactions that we want to add. For instance, these don't even have expense categories to go to or income categories to go to. They might also be tied to a customer or vendor that we want to tag to that transaction. So as you're looking through these transactions, you can certainly do some batch things and click a bunch of them and say post all these, but you might not be getting the detailed information that you want to have into QuickBooks. Your checkbook balance, just fine, but the other information that you want to understand about that transaction may not be there unless you take the time to look through those. And again, I think this is just learning the process of working with QuickBooks. Once you get more familiar with what information you want or need, this will become easier. And there might be things that you can, yep, that's QuickBooks has got it right. Click, click, click there, and boom, I'm done. But I would not go to that route at first. I would try to make sure that you're understanding what it's doing. So let's just look at a couple transactions. So this one is PG&E, which is like probably their power, gas, and electric company. And it cleared the bank on 7/7 for $114.09, and it's noting that there was another bill payment that was made within QuickBooks for that same amount to that same vendor. So if I knew that that was all right, I could just do match and I could be done. But if I want to look at the detail, if I just click on it, it will give me more information down below. So if we're not sure or we want to go look at that bill payment, we can click on this and go back to the bill payment even to clarify that that's the right one. Yep, that was the bill. Here it is. That's the one. So just having the ability to do that helps you make sure that you are matching them appropriately. So since I've clarified that's what I want, and there's really no more information to be added because it was all taken care of when the bill was done, if I do match, that goes away from the list, and now I have 24 transactions pending. And now if I go back and look at my financial statement, that expense is going to show up on my financial statement where it may have not before. Let's see if we have another. This is a customer payment. And it shows that there was a customer received from that payment, from that customer for that amount. So that's probably an easy one to match. Trying to find one that doesn't have. So you can see most of these have categorization in them. And so they're easy, but where you have something like this, where there's a deposit amount for 200 from this company, what is that from? Where do you want that money to go? It looks like we also pay that company, so it makes you wonder if this is like a refund or something like that. So is it something that's an expense, or is it something that's a decrease to income, or a decrease to an expense, or is it an income? You'll want to figure that out. And then if we just look at one of these, I'll look at this one. So it says right here in the description, a refund for a backhoe. So if we looked at our other A rentals, maybe those were going to get charged to equipment rental. It's kind of suggesting that as the account. You would have to decide if that is the account you want it to go. But let's just say that's where we charge our equipment rental. Well, if we go back to this, we probably want to also charge it to equipment rental, even though it's going to be a decrease to that. And that it's a refund, so that makes sense. So then we could put, a customer's name, a job name, any other description in that memo that you wanted to. And again, now that transaction is gone. If we're okay that this is the equipment rental, that's the right account, we could just hit post, and that one can be gone. So you can click through these pretty quickly, but the point being, they're not in your records until you put them in there. When you have multiple accounts connected, I don't think I see any here, but sometimes you'll see over here a word that says pair. So, which basically means there's a corresponding transaction in another account. So when this came into this checking account, let's say I transferred money from my savings account to my checking account. So when it comes into my checking account feed, it comes in as a deposit because I transferred money from savings to checking. In my savings account, it comes in as a deduction with the money being tagged to the checking account. Well, those are essentially the same transaction that's hitting both of those accounts. So if you pair them, you've basically processed it for both transactions. So that's the bank feed, and that's how that works. It's really just feeding into QuickBooks all the information that's coming from your bank account, and then it's your job to sort through those and make sure that they're processed correctly and the correct accounts are being affected, and you're collecting the correct information along with not just the money part of the transaction, but maybe some descriptions or, tagging it to a vendor or a customer correctly, so that when you go into QuickBooks to look at that information, it has the information you're going to need to refer when you're looking at those transactions later, or you have questions about those transactions. Often people think they're going to remember why did we get money back from the tool company, A rental, that, we usually pay them. Why is there a negative to this account? Well, because it had that tag, it was a deposit return. Well, then now that makes sense. And sometimes people think they're going to remember that, but they don't always. So I'm always a fan of putting in good memos into your transactions. If you decide not to use the bank feed, then none of this would show up. You wouldn't have this bank transactions tab if you aren't using the bank fee, and you would just have to go in and create all the transactions yourself. So if you're writing a check to pay a bill, that's going to be an expense transaction. If you're creating a bill that you've received from a vendor, that's a bill. If you're going to pay that bill, that's a bill payment. You would just go in individually and enter each transaction through that. And that would affect your chart of accounts appropriately at that time. And you wouldn't have this bank feed. At that point, I'm going to pause for now. I don't know if we have any questions. We'll take a quick break. I have a class just for AR for accounts receivable for customized reports. I'm happy to stay on the call at the end of the class today or arrange another time if there's a better time to visit with any specific issues people have that we don't address in class today. We will look a little bit more at accounts receivable after the break when we're actually doing some transactions. So perhaps your question will get answered at that point. Lois, is there anyone else I missed? I think that's the only questions I see. As far as the review, the expert review within QuickBooks, that's something that QuickBooks does. That is not something that we do at the SBDC side. So if anyone else has any questions, feel free to share or unmute yourself. Otherwise, take a quick break and we'll resume at 10:30. Also to note, to those of you that may also be wondering about payroll, the QuickBooks platforms, the QuickBooks Online platforms do not have a native payroll function included with them. That is an additional subscription that you need to buy. And that cost varies depending on what level of QuickBooks or payroll services you're using, and also what how many employees you have. So that would be one of those apps that would have to be added on to your QuickBooks Online account to do that. So I think we'll resume, and now you've kind of got the lay of the land a little bit. You've got a little bit more about the backbone of what you need to run QuickBooks. Now we're going to actually do some transactions and walk you through what that looks like. So we're going to go back again to our home page here, and we're going to enter some sales transactions and some income transactions and some expense transactions and walk through that with you. So the first thing we're going to do is create a sales transaction. So the most likely place you would go is to your sales and get paid screen. And under that section here, let's just close that up. You can see you have the opportunity to create sales transactions, invoices. Sales orders are kind of like purchase orders when you're buying something from a vendor. This is a notation that a customer has placed an order with you. It does not have a financial impact, so it's not going to increase your sales. It's just a way, mainly if you're using inventory, to say, hey, you've got a customer who wants to buy 10 of these widgets. So it lets you know that those 10 widgets are spoken for, or that there's an order in process, and maybe that requires you to, that's your key to go buy some of that product that you're going to resell, because you just buy it on a case-by-case basis. But it doesn't have any financial impact until it is turned into an invoice. Sales channels is kind of where you're connecting with the Spotifys, those types of sales channels that are connecting to your platform. QuickBooks payouts, I believe, are like where they're taking out for your services that you're paying for QuickBooks. And then products and services is not a transactional thing. It's another list of all the things that you buy or that you sell your customers, products and services, that may land on an invoice. So we're going to take a quick look at products and services so you have a feel for that. So this can get really complex. And again, kind of as our inventory and payroll class, we dig into this a little bit more. But basically, there's different types of products products and services. Just like there's different types of accounts, there's different types of products and services. So you have service items, you have inventory items. Let's see if we got any more. There's non-inventory items. In fact, I'm just going to do this quickly. Inventory, non-inventory, service, and bundle. That's what's available in this particular platform. Service items are just as they sound. They're labor related. There isn't a physical product attached to them. Inventory items include a physical product that you're selling. And And that physical product is something that you keep on hand in your store, and you want to track the quantity of those in QuickBooks that you have on hand at any given time. Non-inventory is still a physical product, but probably something that you don't keep on hand. It might be a special order thing, or it might be that you're a very customized business. So if you're selling a product, you don't keep it in stock, you order the product you need. Like if you're a contractor, you're not going to necessarily keep a lot of specialized lumber in stock. You're going to order it as you need it for the job. So that's basically the difference. And when you look at any of these items, and let's look at one that's actually in place here, a service item. Basically, you're giving it a name, you're giving it the category or the type, and then you're giving it some kind of description. Again, it's up to you if you want to use that box. But that is the whatever in this description box is what's going to show up on the invoice when you use this item on the invoice. It's not going to say design, it's going to say this, or it's going to say both. It'll use the design name and then it'll have this description. And then you have to tell it a sales price and an income amount, or income account, excuse me. So when this item is placed on an invoice, it's going to increase design income by $75. The sales price is, my recommendation with that is use your most common sales price. If you sell this design service for $75 80% of the time, but there's maybe some design services you charge more or less for, put that in there, put 75 in there. Then only 20% of the time you'll have to change it on the invoice. But you can, it's just going to pre-fill 75 on the invoice, but you can change that on the invoice if it's a special circumstance. So rather than leave it at 0 because it's not always going to be 75, put it at 75 if that's 80% of the time, then only 20% of the time you're actually having to change that. And then you also will indicate the sales tax nature of this item. Is it taxable or non-taxable? In South Dakota, almost everything is taxable. Now, there's a difference between an item being taxable and a customer being taxable, and we'll talk about this. So we're talking about the item. If you sold this item to the average person on the street, would you have to charge sales tax for it? So that's the type of information that goes into these items. Now, we might have 10 different items on this list that are tied to design account. And that's the neat feature of this products and services list. You don't want 10 different line items on your profit and loss for each of the sales of those things. You want to be able to lump your income into bigger categories than that, but under those categories, you might want to see, well, how many hours of this service did we sell? Or how many units of this product did we sell? You can do that through this item and service and item list. In the inventory items, there's a little bit more information that goes into that because you're capturing not only the sales side of the transaction, what you're selling it for, but you're also tracking the purchase side of the transaction. So when you use inventory item, you have to do a little bit more accounting work. You have to be a little bit more specific when you buy product from a vendor that you're telling QuickBooks that this was 10 pumps and 3 rock fountains that you bought, not just, $1,000 worth of product. You have to break it down because it's this inventory account on hand is only going to be accurate if you tell QuickBooks not only what you sold of that item, but also what you put into stock into your, to get to the correct quantity on hand. This quantity on PO and quantity on SO is kind of what I was referring to with the sales order. If somebody's put in a sales order to buy one of these, it would show up here. So it would kind of let you know that, well, you might have 25 on hand, but you've got 10 that are spoken for. So you can't go sell 25 to somebody else without reordering. It also lets you to put a reorder point in there. If your quantities get low, it'll, help you determine what needs to be reordered. On a non-inventory item, and I don't see any on this page. Let's see if we can find any on the next. Well, It's not letting me go next. Okay, whatever. Non-inventory items would be only tracking the sales side of the transaction. You're not keeping account of what you have on hand. So it's going to look a lot like a service item as far as setup. You're going to have a name, you're going to have a price that you sell it for, and you're going to have an income account that it's attached to. So the products and services list is a list that you should give some thought to as to what it is that you want to track and what information is helpful for you to know. But then also in a way that you're not creating a separate income account for every single product you sell. You know, if you're in a bar or restaurant, you might have food sales, beverage sales, and merchandise sales. So you might have, 50 items under each of those sales categories, and that's fine. You don't need that detail on your profit and loss. You just need those 3 top categories, and then you can drill down into this product and service lists and reports along that to see what you sold of individual items. So really in QuickBooks, there's 2 ways to record income. You're either going to do an invoice or a sales transaction. And we're going to start first with creating an invoice. So we're just going to do invoice. We'll see here, there's a list of invoices that have already been created. And we want to create a new one. And we click on that button there. So the first thing it's going to ask is who's our customer? And so we're going to put that in there, and you just start typing. If they're in your list, they're going to pop up. So just if they're not in their list, you could add new. And then whatever information is in that customer's record is going to show up. So his name is there, but no address. We have said in his customer record that he gets net 30 terms. So the date of today's invoice is 8/4, so it's going to be due in 30 days, which is 9/3. So that's all pre-populated once you choose that customer. And what are we selling to Mr. Solfrank? We're going to sell gardening services, weekly gardening services. So again, once I choose that, it pops in the description and a rate, which this particular record does not have a rate attached to it. So we have to put that in, and we're going to put that in at $50 a week. So $200 of taxable services to this customer. And then this customer also bought a rock fountain. So we're going to put that in there. And there was an amount already put in there. So we're just going to take that. So you'll notice over here in this tax column, one has a check and one doesn't. So in this record, this item is marked as taxable. This item is marked as non-taxable. This sample company is based in California, where they do not charge sales tax on services. If we were in South Dakota, this would be charged as tax, or noted as taxable. So what this did then, it breaks down this detail of what was sold, so the customer can also see what was sold, and you can add to the descriptions if you want to add to the descriptions. And then it creates a subtotal down here. If we were giving them a discount, we could add that in there. It also has a taxable subtotal, which again is only the fountain. And it figures out, based on the customer record, what sales tax applies to that customer, because the sales tax is based on where the customer receives the product. And then it will calculate, once I hit save, it'll calculate 8% on the $275. That will become sales tax here to come to a new invoice total. So the sales tax is automatically calculated for you. So let's just save. And now it's added $38 of tax. So when this invoice is saved, what's going to happen on the accounting side? Well, I sold $475 of products. So that's an income to me. So that's going to show up in an income account. And the income account it shows up in is going to be tied to whatever income accounts these 2 items are connected to. So this one might be service income. This might be product income. whatever the income account is in those item records is where that 200 is going to show up and where that 275. The $38 is not income to me. That is just money I'm collecting from the customer on behalf of the state of California in this case. So it's a liability to me as a business. I have to turn around and pay that money to the state. So $38 is going to go to our sales tax payable account, a liability account on the balance sheet. And the $513 total, again, that's not income. The $475 is the income, $38 is the payable. This is what's going to sit in our accounts receivable account, because an invoice means we haven't been paid for this yet. That's why we're preparing an invoice, because we have not been paid for it. So that becomes accounts receivable tied to this customer. And that's what the accounting is on the back side. Okay, so we're just going to save and close. And now we have this invoice. And now if we go to our invoice lists, it should show up there. Okay, we'll probably need to refresh it. But if we go to our customer list, and we go to Dylan Saul Frank, we'll see that he has an open balance of $513. And it's prompting us what the next step's going to be. He has an outstanding invoice, so the next step naturally would be to receive payment. Before we do that, we're just going to click into his record quick to see what kind of information is collected on the customer side or is available on the customer side. So in a customer record, you're going to see a lot of information. Their name and their address, which again, there was no address for this customer because it didn't populate on that sales receipt. You can see a list of transactions, past statements, customer details. If we edit this record, we can get a little bit more into detail of what's in here or what information we could put in here. Notes or attachments, maybe if we created a quote for them or some other document outside of there that we wanted attached to the record, we could upload that. What their payment, if they have a primary payment method, payment terms. So there was no terms here. It populated net 30 on the invoice. That's probably a company-wide term. So whenever you create an invoice for a customer, it's first going to look at the customer record and populate all that stuff based on the customer record. You'll see also, there's no tax type in here either. So since there was nothing in the customer record, it just pre-populated from the company default. But in a case where you might be dealing with a city or a county government where what they buy might be taxable, but they are not taxable as an entity, then you put the exemption details and the tax information in here, or mark that this customer is or is not taxable, and what, if they're taxable, what the code is. And that's the different rates that are in your record, or you use the company default. So you want to have good information in your customer records, even though it will let you add a new customer with just adding their name. You want to put their address in. You might want to put in, their tax rate, or if they have a preferred way of being contacted, because then that information feeds into every transaction that you do with that customer. So now the customer owes us money, and we receive a check from them for the $513. So we can do, go to the customer record is probably the easiest way to do it, where we just were. And we can find the customer and we can say, okay, we received a payment. And now when I click on that, it's going to populate down here any transactions they have outstanding. And you can see it's already matched this and says that we received $513. Now, if we only received $313 from that, then we would just change this amount and it would keep track that he still owed us $200. But assuming he paid us what he owed, we can state how we paid, if he paid by cash or check, and if there's a reference number. QuickBooks QuickBooks does have online payment abilities where you can collect, they can be your merchant account essentially, or you can use your outside merchant account. So just keep that in mind. And then what will happen is now this invoice, on the back end, accounting wise, what happens? We have $513. So that is going to be received by us and put in some account. In this case, it's going to undeposited funds. It's not going directly to our checking account. It could if we wanted. If we wanted to put that right directly to our checking account, we could. But we want to keep in mind that, are we actually going to take that check over and deposit it all by itself in the checking account? Because remember, if we have our bank feed connected, then it's going to come through as a $513 deposit. And if in fact we took 10 checks over to the bank, this being one of them, our deposit amount would not be $513. So we wouldn't be able to match this transaction in QuickBooks with the transaction that's coming through the bank. So that's why the undeposited funds account, or funds to be deposited, I've seen it in both ways in different software, QuickBooks versions I've used. That's kind of where it sits. It's kind of like the cash register drawer or the bank bag that sits on your desk and collects these checks until you actually go physically create the deposit. So putting it in undeposited funds. And then what else happens? Well, they owed us money. We have an accounts receivable on the books. So now they've paid us, that accounts receivable goes away. So we're going to record and close. And then if we go back to our customer list, we'll see that he no longer has an outstanding balance. The next step along this process then is to make a deposit. And this is where it's important, if you're using the bank feed, to try to work this appropriately. And there isn't a deposit feature here. That's one I typically have to go up here to find. So this, I'm creating a deposit. QuickBooks tells me that these are all the items that are sitting in undeposited funds. And so I'm going to deposit all of these. So now I'm going to have a deposit for $275 or $25.75.52, not for these amounts individually. And then I take those 3 checks to the bank, and my bank feed is going to come through, and it's going to be for this amount. And then I'll just be able to match those. As opposed to if I took this to the bank as a total deposit, but individually deposited these through that receive payment window, now I'm going to have 3 deposits in QuickBooks for these amounts, 1 deposit coming from the bank for this amount, and that makes it awful hard to. QuickBooks is not going to match those. You're going to have to know which ones are there to match. So what I recommend, especially if you're using the bank feed, is to go through this process manually in QuickBooks to receive the payment and make the deposit, so that when it comes from the bank feed, they're going to match up. So the other way to create or record income is to use a sales transaction or a sales receipt. And it looks very similar to an invoice. The only difference is you've got this receive payment function built right into it. So here you're still going to list all the things that you sold to them, and it's going to calculate whether it's taxable or not, but you're also going to say, how are you being repaid? Because by its nature, a sales receipt means you've received the money. You might still group that money into undeposited funds, because you might still, group checks together to take to the bank. So that still is the same. And so you just bypass the whole accounts receivable process. So when this transaction is recorded, whatever you sold is going to increase the income based on what accounts these items are attached to. It's going to calculate tax, which is going to go to sales tax payable. And then it's going to have a total amount. And that total amount is going to go to undeposited funds. So that's how your transaction balance is out there. So 2 ways to record income. If you receive money, it's a sales receipt. If you have not received money, it's an invoice, so that you have a way to track who owes you money. Okay, so on the expense side, likewise, there's a couple ways to record expenses. If you've paid the expense, if you're, writing a check and it's something that you're paying for at the time you receive it, maybe you're paying for it with a debit card or a credit card, those would be expenses. And if we just look at this particular one, we can see what that looks like. So this was a backhoe rental. We said, who did we pay? And that's probably going to be A1, a rental, but they're not in your list. So that doesn't help us much, does it? Oh, A1, maybe I typed it in wrong. Well, okay, we're going to put them in the list then. A1 rental, that's who we're paying. And then we're indicating, okay, so we're just going to save that vendor. We're indicating how we're paying them through our checking account with a check number. If we're printing the checks through QuickBooks, we're going to leave this as to be printed. If we're manually printing the checks, then we're going to put a check number in here and manually print that check. And the payment of date and the payment method is a check. So this is just indicating the expense, and this is the category or the expense account that's being affected. So when we save this, our expense account for equipment rental is going to go up by $1,200, and our checking account balance is going to go down by $1,200. Pretty simple. If you're using a debit card, you can use this same function. Instead of putting a check number in there, you could just put debit, or, or if it's an automatic payment that comes out, it could be ACH. A lot of the expenses, you're probably more likely to process directly through the bank feed rather than to do this process, especially if it's a check you've written, or a debit card transaction, or even a credit card transaction. If you're connecting your credit card company, you wouldn't have to come in here manually and do it. You could just process that through the bank feed. What probably you're not going to process directly through the bank feed or totally through the bank feed is if you have an accounts payable function. And if we look at that, this is our bill and bill payment function. So here is a bill that's been added into QuickBooks, and we're going to take a look at that. So this is the bill that was created for legal and professional fees for $315. And so they created a bill to be paid at a later date. You typically probably wouldn't do that with legal and professional skills. You might do that more likely with vendors that you're buying product from, but maybe they have a retainer or something. So every month they pay them a certain amount and they have them scheduled out. So when you record a bill, what's going to happen is this legal and professionals fee account, and it's probably accounting underneath there, yeah, is going to go up by $315, and your accounts payable is going to go up by $315 because you're not paying this today. You're just recording the payment. You're recording the expense, excuse me. So a bill creates the expense, so you know that you've incurred the expense, but since you're not paying it, it causes your accounts payable to be increased, so you know who you owe money to. Just another note, this legal and professional fees, accounting, when you see a colon like that, that signifies that accounting is a sub-account. We don't have the indentation here, we have it in one line, and that colon is the indication that that's a sub-account. So when you save this, that's what's going to happen. Your accounts payable is going to go up by $315 and your accounting fees are going to go up, or accounting expense is going to go up by $315. Be wary, not be wary, but just be aware that this save and schedule payment takes you into QuickBooks bill pay function, their online bill pay function, which is another service, a chargeable service. If you just hit save, that's going to create this within your system so that you have a list of who you owe money from. And then when it's ready, you can go pay it. Again, don't use schedule payment, but now we're going to go pay this. Whoops, this one, I guess. Going to go pay this one. Instead of doing schedule payment, we're going to, let's see, I went the wrong direction here. Instead of schedule payment here, we're going to, that's interesting. View and edit the bill. Well, let me try this. Schedule payment, see what it does. Okay. See, it takes you to the bill pay function. I don't want to do that. It should be something like pay the bill is what it's asking you to do. So let's see if we get out of here. We could go to bill payments. That will be every bill that's already been paid, not necessarily new bill payments. What we probably need to do is go to our vendor list. Again, there's always more than one way to get around in QuickBooks. So we're Robertson Associates. So we have the option here to pay the balance, make a payment. That's kind of what I would say. Instead of schedule payments, which is going to take you to the bill pay, you make a payment. And that brings up this screen where you can indicate how you're going to pay it. Are you going to pay it with your MasterCard, with your checking account? If you choose checking, it's going to have you put in a check number there, or if you want to print it later, if you're printing your checks through QuickBooks, you can click that box. There's nothing on this with regard to what we purchased or what expense account is going to be affected, because that's already been taken care of when we created the bill. This bill is the, I don't want to leave without saving. Shoot. Sorry, got to go back. Sometimes you click faster, your fingers work faster than your brain. Where you think you're clicking somewhere and you didn't. Well, why is this being so difficult? Okay, we're going to try this one last time, and I'm just going to slow down a little bit here. So we're going to go to our vendors. We're going to go to Robertson Associates. We're going to click this drop down arrow. We're going to make a payment. And basically, what we're doing here is we're taking care of the accounts payable. When we entered the bill, the expense was already recorded. So we don't have to record that this is an accounting expense because that's been done. So when we save this, what's going to happen? Our MasterCard balance is going to go up by $315. And our accounts payable balance is going to go down by $315. So when we save that and we go back to our vendor list and we go down here to Robertson's, we can see that that bill's been paid. If we look at a customer or a vendor record, it looks a lot like the customer record, right? There's the contact information, there's some summary information, there's a list of transactions, there's details. You can edit it and you can see the type of information you can plug in there. What's the payment terms? Is there a default account that you want? You know, some vendors, like this vendor particularly, maybe that's the only thing they do is provide accounting services for you. So if that's the case, then you'll want to just use accounting in here. And so every time you create a, let's see, that was under legal, a transaction, it'll automatically fill that in and you don't have to do that. So another tip there. Okay, so to record expenses, you can either do an expense transaction or you can do a bill and then later record the bill payment. That's a summary for that. If you need to do things like credits, those are going to be found up here in your vendor credits, credits for customers over on that side. I'm going to take a quick minute here and talk a little bit about reconciling your bank account. Very, 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 very important. Okay. Feature. With the bank feed, it's a little less likely that you're going to miss automatic payments that come out of your bank account because that they will come through the bank feed. But if you're not using the bank feed, that's one area where it's easy to forget something that happens automatically. Also, you know, you record transactions. If it doesn't come through the bank feed, why isn't it coming through the bank feed? Why isn't that being processed through the bank? So it's very important to reconcile to make sure that the information you have in QuickBooks and the information that the bank has are jiving. And you can see if there's outstanding checks that haven't cleared, or you can see if there's a transaction coming through that you hadn't already recorded. So it's a very simple process. The beginning balance is really the ending balance of the last statement that you balanced. So, just like our regular bank statements, our ending balance on this month is the beginning balance on the next month. So that's what we have right here. Then you just put in whatever the ending balance is on your current statement you're trying to reconcile and what the date is of that statement. And then you hit start reconciling. And what you will see in this window is, here's the information you put in. This is the difference between the beginning balance and the ending balance with what's already been processed. So it may, given the timeline of your, the month window of your statement, it may find transactions that fall within that window and automatically check those. Which, if you're doing everything up to speed, it might check everything it checks might be on your bank statement, and this may come up as a zero difference right from the get-go. This is our goal, to get this to zero. We said it has this much, we're trying to get it to this much. So what payments and deposits have come into our account? And it's only going to flag those within the certain date range, but now you can go in and mark everything that's on that account. So you check your statement, you click off everything in QuickBooks that's on the statement, you should get to zero. If you don't, there's something missing, right? There was something on the statement that wasn't in QuickBooks. There was something in QuickBooks that you checked off that wasn't on the statement. There was a dollar amount that was entered in wrong. If it's divisible by 9, that's a transposition error. So maybe this was supposed to be 130 and it's in QuickBooks as 103. You're going to be off by $27. That's divisible by 9. So those should be some hints to get you to zero. If it's off by 3 cents, probably that means something was entered wrong. If it were me, I'd go find the 3 cents. I would not want it to be off by 3 cents. Other people might say, I'm not looking for 3 cents. I wouldn't prescribe to that, but I can understand that. What happens when you force this difference? You say, okay, I'm not looking for 3 cents. I just want to reconcile this. QuickBooks will let you do it. But what it will do is it will create a reconciliation discrepancies expense count that's going to show up on your profit and loss statement. And if it's 3 cents, okay, great. But if it's $3,900, And you take that to your accountant at the end of the year, they're going to say, to do your taxes, they're going to say, what the heck? What is this? We got to figure this out. So you want to reconcile, you want to make sure you're recording stuff because there was something there, there's some expense you're not recording accurately if you're just lumping it into that account. The reason you do QuickBooks, yes, you do it so you can have good records for tax time, but really you do it for yourself so you can learn how to better manage your business and understand your numbers. And so when you're not paying attention to the details and you're forcing things along, you're not helping yourself in the long run. So I will get off my soapbox there on that one, but please do reconcile. If you're doing it on a monthly basis and you're doing everything the way you should be doing, it's a 5-second process, really. It doesn't take long at all. So it's simple to do. A lot easier than the old days when you had to do everything manually, for sure. I'm going to take a quick look at sales tax. This is one of those areas that if you're setting it up right, it should work just fine, but you just got to make sure that you understand how you are charging sales tax, who's sales taxable. Get that right. You don't want the county to call you and say, hey, we don't pay sales tax, fix this invoice. And now you have to go back and fix the invoice and you have to fix your accounting. If you know the customer's not taxable, fix that in QuickBooks right away so it never charges the tax to begin with. I'm not sure how much of this is set up. So I'm going to probably just talk through this more than anything. In QuickBooks, you have to do a couple things. You have to set up your individual tax items, which are in your products and services list. So if you know you have a business in Aberdeen and everybody comes to your store and buys product from you, and you never have to charge anyone sales tax outside of your location, you can get by with one rate of 6%, or you can create a 6.2, or you can create a state rate for 4.2 and a city rate for 2 and combine them together. You're going to have to report it to the state that way, so that's probably the preferred way to do it. But again, if you're trying to be super simple, create a rate for 6.2%, and then know that you have to break that out when you do your tax return with the state. You have to identify in QuickBooks who you pay your taxes to. So in South Dakota, one place we pay those to, the South Dakota Department of Revenue. And then what it's going to happen is every time you do an invoice and it creates that rate, that sales tax, and puts it in sales tax payable, that money's just going to keep piling up with every sales receipt and every invoice you create. And at the end of the month, it should represent what you owe the state. And then you'll go through a process of paying your sales tax within QuickBooks, and it'll tell you what you owe, and you can create a check to pay that, or you can charge it to your, well, I don't know if you can charge it to credit, but basically, you're going to create a transaction in QuickBooks that it's been paid. Now, in the real world, you still have to go to the Department of Revenue and fill out their form, and the actual money is going to get pulled out of your account based on what you do on their website through their online sales tax portal, the ePath system. So creating the payment in QuickBooks does not generate a payment to the state. So you still have to fill out that report and generate that payment, which then should come back through your bank feed once it hits your bank account, and you can sync those two together, match those two transactions together. You always want to default with what the state function says you owe. If you're filling it out right, you might have some discrepancies in QuickBooks that will be, maybe you charge somebody sales tax you shouldn't have. Maybe there's use tax that you have to pay. Maybe there's a rounding error. That's often very common because QuickBooks is calculating your sales tax by every single transaction, whereas the state is calculated on the bulk of all your sales for that month. So a lot of times you might be off a few cents. You typically should pay to the state whatever you collected from the customer. So if that means you're paying the state 2 cents more than what they say you owe you, then pay the 2 cents. You don't want to keep the money that customers paid you for sales tax. So it's a little bit a setup in that. Again, that's where you want to work with your accounting professional or somebody who knows QuickBooks and accounting enough to help you with that. Unfortunately, it's not set up in here, so it's hard to show that to you. I would say the main thing about sales tax is, understand your responsibilities with the state first. What tax rate do you have to charge? When do you have to pay? Are you paying monthly? Are you paying every other month? Are you paying every 6 months? Understand what items and services you offer. If there's any that are not taxable, make sure you set them up in QuickBooks correctly. Understand customers that you sell to that may not be taxable, like city and county entities or certain nonprofit organizations. And then make sure you mark those as being non-taxable so you're not accidentally charging sales tax. And then it's a matter of just going through the process and learning along the way if it's something that's new to you. And the Department of Revenue staff are very helpful. They want you to do it right. And so they'll help you understand with what questions you have. So don't be afraid to reach out to them also. Okay, let's take a look at reports. So again, as I mentioned, yes, you want to do this so you have good information when it gets to tax time, but having access to all these reports and making sure that the information is correctly can really help you understand your business better. And that's what it's really all about. So let's look at a couple key reports. The profit and loss we looked at a little bit earlier, but just to understand what it is that this is actually showing. So let's see if I can find out how to, maybe it's here. Well, I won't take the time to figure it out. In the old QuickBooks, there was just a, here we go, collapse all. Is that what I want? Not quite. I want to collapse some. I should have. I just don't want all the sub accounts. I want this a little bit easier to see. So what you see, and it's for year to date. So these are any transactions that you've recorded in QuickBooks. It does not count any pending transactions that are in your bank feed, just ones that you've already processed from January 1st to August 4th of 2026. And typically when you look at financial statements, you want to look at the end of the month. So let's just change this from, so we've got a 7-month look here. Make me do this again. So this tells us how many dollars in sales total income for that 7-month period. What are costs of the products that we sold. So this tells me we're doing a lot more service income, right? And look at all the service income we have. We don't have hardly any product income. So on this $900, we have $400 of product costs that it costs us for whatever that product was. And then you have the gross profit. This is what you have left over to pay all your other bills, okay? You don't get to keep, you have to replace that fountain that you purchased. So you've got to pay for that. And then you don't have $10,000 to pay for all your expenses. You've got $9,700. And so then you can look at all your expenses and you can look at, you can customize this to add a percentage column here. So sales would be 100%, cost of goods would, everything else would be a percentage of sales. So you could see what your gross profit margin is. You could see how much as a percentage of sales you're spending on advertising or staffing or maintenance. And you can track that month to month and year over year, and you can understand what's typical for your industry. And you can use that information to tell you what's going on in your business. If you're in a business that has, 50% cost of goods sold and you are at, less than 10%, what's wrong? That's something's wrong with that. Or if you find out that this percentage is creeping up over time, that might mean the cost of your inputs are growing, but you're not increasing your income. Obviously, everybody likes to look at this bottom number, what's the net income, but that alone doesn't tell the whole story. So take a look at these, understand what these reports are showing you. So total sales, cost of your product that you sold, what you have left over to pay your expenses. Your expenses are $5,000, so you have an operating income. The thing to keep in mind that what's not included in here. Principal payments on loans is not included. And depending on how you're recording any loan payments, you should record the interest here. That would be an expense, but the principal payments are not. So this doesn't mean that you have $4,500 sitting in the bank. That money could have been spent to pay down debt. That money could have been spent to buy a new piece of equipment, which doesn't show here either, or to buy more inventory. So you're stacking up, you're buying more assets basically. So keep in mind what this is showing. It's showing you the ability to pay those extra things, but it's not necessarily showing you cash in the bank. The thing also to note, any of these numbers, if I wanted to say, well, geez, what did I spend $1,100 on legal and professional fees? I can look at the detail and I can see exactly every transaction. And then I might look at this Books by Bessie. Why is that under accounting? Well, maybe it was accounting for dummies or something. I'm not sure. But so if you're unsure of what's in a number, you can just click on that number and then go back to the summary report. Like I said, you can do a lot of customization on this by showing things like, let's see if it's on here. Maybe it's under this one. Not seeing it in this particular report function. You can add, you can change the type of account from the standard account. You can do like a profit and loss comparison for a previous year or a previous month. How is this month compared to last month? You could do as a percentage of total income, which is what I was just referencing. So they've kind of broken those out already as just standard reports. So use those reports to dive into your numbers and understand your numbers, and maybe to track seasonality. If your business is seasonal, what percentage of your sales are happening in your busy seasons versus your other seasons? So that's profit and loss statement. Balance sheet. So this profit and loss statement shows the operational health of your business, where the balance sheet shows the financial health of your business. Couple key things to look for here. So the rule or the definition of a balance sheet is your assets are equal to your liabilities plus your equity. So if your assets are $22,000 and your liabilities are $31,000, that means you have more debt against your company than the assets are worth. And that's why you have a negative net equity position. That's not a financially strong company, right? You want this net income to be positive for the year, but it's negative overall. This is looking at the whole life of your company. How much more have you made than you've lost, basically, the accumulated revenues of your company. Other things to look at is, looking at your accounts receivable and your accounts payable. Are those an accurate reflection of who owes you money and who you owe money to? Do you have everything recorded in here correctly? You want to look at, what's your ability of your liquid assets, which would basically be inventory and receivable, or cash and receivables. Most liquid, they're going to turn over quicker than inventory is generally. Is that enough to pay your current liabilities? 6,000 versus 8. Yeah. As long as you're collecting your receivables, you should be able to pay your immediate bills. But the fact that your assets are less than your liabilities is a concern, not something you can't necessarily recover from, but just another thing to look at. So understanding that this statement shows what you owe, your assets versus what you own, your assets versus what you owe. There are any number of financial statements that you can look at. Those are the two basic financial statements, but there's a lot of other statements. You can get details on your who owes you and who you owe and how, are they current or are they behind? Are they, past due? Or do you have vendors that you're past due to? You can look at your sales by customers. You can look at your sales by product or service. That's where you can see how many widgets you sold of any given item, how many rock fountains over this 1 month period that you sold, and what your profit margin was on those. So there's a lot of great information. Again, take the time to kind of look through those and learn about those. And if you find there's ones that you use all the time, just mark them as favorites and they'll be at the top of the list and you don't have to look through all of those. There is ways to customize and filter your data. So if you're looking at like a sales by customer and you only want to see the customers that you sold $1,000 a year or more to, you can filter it out. So it just shows that. All kinds of different customizing. If you find yourself customizing a report the same way time and time again, you can memorize that report so you don't have to customize it every time. All you have to do is change the date. So there's a lot of great features in the reporting side as well. That could be a whole nother class about how we look at financial reports and what reports, but I think it's custom, it's specific to each customer too. Your type of business, every business maybe has a little bit different need at looking at certain things, or that are important to you. But the financial health, the balance sheet, and the operational health, the income statement or profit and loss statement, those are kind of universal to all businesses. Okay, so let's see. With that concludes what we're going to cover today. Let's see here. I'm going to we have a few extra, a few other items to note. I did put these in the chat at the beginning of the class of other training that you can find. We won't be doing another QuickBooks class probably till February of next year, but all of our recordings are recorded and they will be listed here at this Grow website. This not only lists your future trainings coming up, but also recordings of past trainings. So there's other accounting ones and there's ones there on Canva. So there's a lot of great training opportunities to go look at and to be aware of future things coming up. I know one class we have coming up in September 10th is branding beyond the logo. Rachel will be teaching that class about creating experiences in your business and how, what customers are looking for, that the brand is really more than just the logo. It's everything that the customer experiences around your business that creates your brand. And then South Dakota CEO, our partner today, has a great variety of trainings that they're offering too. And their link there, and that will give you access to the conferences that are offered by the West Center and the East Center both. If you have any other topics of training, please let us know. We'll be sending you an email today with a survey where you can provide us feedback on today's class and future topics you're interested in, as well as a link to the recording for this class. If you need to reach out to us here at the SBDC, Rachel and I are here in Aberdeen, and we'd be glad to help you.